I'm going to show you today, obviously, what qualifies as a clean IFVG setup, how SMT is going to have high probability to your confirmations. And as I say, you're going to get this full PDF to follow with the exact rules and everything. But let's go ahead and get into this. So this is obviously the strategy, right? The inverse fair value gap strategy is built around one simple idea. If liquidity has been swept and a fair value gap is broken in the opposite direction, price is likely to continue to rally, right? So this model obviously thrives on these three things. The symbol that we're going to be using this on today and the symbol that works best on is NQ and ES. And we're going to use timeframes for entries such as 1 minute, 2 minute, 3 minute, 5 minute, and maybe even we'll get into the seconds as well if an opportunity presents. As you can see here, this is what a fair value gap is, inverse fair value gap. This is what SMT is, ES is. So SMT is essentially sort of a crack in the market when two correlated assets, one makes a lower low whilst the other makes a higher high. Right? Normally they would be correlated. Normally they would work together simultaneously, but in this situation they didn't, which is what's SMT, which gives us sort of a signal that the market's likely to about to reverse. So we're going to be pairing SMT with IFVGs to use as an extra confirmation to obviously increase the probability of our trades. And by the end of this, we're going to backtest a month together, right? And by the end of it, we'll see what the win rate is. We'll see what the risk to reward is. We'll see all these stats together. And if it's something that you like the look of, obviously you can go and backtest it at the end of today, right? So let's go ahead and jump straight into it. Okay, so what we need is to pull up two assets side by side here. So we've got MNQ over here and we need MES over here. So for those of you that aren't familiar, this is NQ and this is ES, okay? So let's go ahead and jump straight into New York session. As you can see on here, right, the sessions that we trade is New York session. So we only want to be trading New York session with this. Now, as I say, as always with these backtesting webinars, it's up to you guys if you want to test out in different sessions, if you want to test out certain things. I'm just giving you a base today that you can walk away with so you understand how to use it and what the model is, right? If you guys want to go further, optimize it, test it, whatever, you can feel free to do that. So first things first, right? Going through the checklist, what we need to do. Step one, we're going to start with the 4 hour and 1 hour to determine where price is likely to go up and down, right? So we need to identify a draw on liquidity. Now, let's have a look. So on the 4 hour here, we can see that we've opened with this gap down, right? So our bias for today would be to get this gap filled, as this would be the new week opening gap, okay? So that's our bias, that's our draw on liquidity today. Market's about to open. Where would I look to enter? So on the 1 hour, we've got this fair value gap here, and we've got this fair value gap here. So this is just me determining my bias for the day. I know that my bias is bullish, but I need to look for some sort of entries. We already took out this low here, so we could just push up from here. Where's 50%? So discount would be this fair value gap down here. So in a perfect world, I'd like to see us pull back to this fair value gap, but we might just rip up from here. So anyway, regardless, let's go ahead and see how market opens. So I'm just going to go ahead and press sync time frame on that. So it's 2:15, so 9:15 EST time. I'm GMT time, just for those of you that might be confused by that. See what reaction we get at market open. So market open does just push straight up. Okay. Any SMTs? No SMTs. So now we wouldn't want to look for a short because our bullet bias is still up here. So maybe if we can run down into this lower fair value gap, we might look to take a long. Okay, we do tap into that fair value gap. So now this is where the model comes in, right? So now I want to start to look for an entry. So we've taken out those lows, we've tapped into this fair value gap, and we've still got our bullish bias. If we don't get the IFVG model here present, then we've got no trade. So we absolutely missile up from there. We could have entries here. It's a bit tough. This would have been our fair value gap that we've just inversed, right? We rejected this 1 hour. So we tapped that perfectly, and that is also in discount. All right. So discount, fair value gap, 1 hour. We've tapped that perfectly and rejected. What we've done here, just a little tip for you, is with this fair value gap, let me just clear off my chart to make this a bit cleaner. All right. With this fair value gap, we've actually displaced through this fair value gap. Now, what that means is we've gone through it with aggression. Okay, so this is a clear indication that market has switched gears. Now, yes, I would like to see a slightly better entry because we're going to have quite a wide stop on this. And our target's going to have to be pretty big. We're going to have to target all the way at the gap fill. Partials being this high and break even potentially being this high. But yeah, this is still valid, I would say. Yeah, this looks okay. We can take this. All right, so let's see if we can get tap back in. Let's use a limit on that. And let's go advanced order 1%. So I wouldn't give this like A++, but it definitely isn't bad. I like this displacement here, okay? But I just rather have a slightly better entry and a slightly smaller TP. So we do get tagged in there. So we go break even straight away there. We potentially take our 50%. Now we've taken out this high. So let's just take our 50% there. But as you can see, like notice as well, the displacement and how aggressive we went through this fair value gap, right? That is such a clear indication that the market is just going to rip, right? Because this move is so strong, so aggressive that we now are likely to continue. And new week opening gap here, right? So this big gap here or new day opening gaps, they're one of the strongest draws on liquidity. So let's just keep this going. Do we hit take profit? Maybe even trail our stop loss up if you really wanted to. And let's just see if it goes. So we chop around for a while. Probably look to take this low and then move up. Do we get there? All right, so realistically, the day's over here, right? It's like 8 p.m., right? I'm closing this out. So we'll just close this out. And that's the first trade. So that did end up being a win. We ended up closing here about a 3-1. Right, you don't always need SMT divergence, but it does just increase the win rate a lot more. If this didn't have such strong displacement here, right? If this displacement wasn't super, super strong and this wasn't so bullish, I probably wouldn't have taken it, right? Was there SMT? Let me check. Let's see. Let's zoom out on the 5 minute. 5 minute. No, all these lows all got taken. Actually, yeah, we did here. 1 second. So we did also get an SMT there, but I just didn't clock it. So there, that low to that low, right? So there was our SMT as well. Okay. So yeah, this example was kind of a harder example to understand, but what we'll do is we'll get into the next day and hopefully we'll get another bit more cleaner example. But SMT, right, is essentially this low here didn't get taken, but it did on ES, okay? So that would be a crack in that. And then we obviously have the inverse here. Now, there was also this inverse on the 5 minute, but you wouldn't have got in it just because it was so big on the 5 minute. With SMT, does it matter if NQ is stronger than ES or ES is stronger? No, not necessarily. But so for example, if you're bullish, you would want to trade NQ here just because NQ failed to break the low, right? So this would mean that NQ is holding more bullish. So this would be a slightly more bullish scenario for NQ rather than ES because ES is the one breaking lower. Okay, but not necessarily. It doesn't always matter, no. It's preference, right? But this day's done, so let's skip to the next day. I want to try getting as many examples as possible as we can. So we're just going to trade it as much as we can together. So first things first, starting off on the day, where's our bias, right? Let's clear the chart. So we've got this 4-hour order block. Now, in general, this whole thing is going to be using ICT concepts to find your daily bias. So if you haven't obviously seen the previous webinars that we've done on ICT concepts, I would recommend obviously just brushing up on those a little bit. So 4-hour, we'd look to target there. We've got this order block here. So my bias is going to be this high for the day. All right, just looking on the 1 hour, we have also inverse this fair value gap on the 1 hour. So that's sort of a bit more confirmation there. Let's just check ES. So ES, same sort of situation, nothing crazy going on there. Let's drop down to the 15 and the 5 minute, and let's just see how market open plays here. So instantly what I'm seeing here as well on the 5 minute. So I'm seeing this liquidity built up here, right? And we've got this fair value gap down here that we could push from. So let's see how market open reacts. So we do reject off that. We've got 5 minutes left. So market is now open. Let's go on to the 1 minute and watch what happens. Let's go on the 1 minute on both sides and just look and see if we get some sort of SMT. So we have got an SMT here, all right? So we've got higher high on ES over here, lower low on NQ here. See how this low here, right? This low got taken out, but on this, on ES, it didn't get taken out. So do you guys see that? That's SMT right there, okay? So I would want to see some sort of bullish. I mean, our only one here is here, and it did already get broken through. I'd want to see a little bit more though, just because it's still market open. Okay, so here's market open, right? So market is now open. We still got another SMT there, right? We took out this low on NQ. On ES, we didn't quite manage to take it out. Can you see that? If I actually just drag it here, it hasn't quite taken it. So now where's our fair value gap we want to inverse? We need to open one up. So we do push away with displacement there once again. So again, not the best example to show you here, but we can make it work. So we have inversed this fair value gap. Are we likely to pull back? No, just because the displacement's so much. So you could just enter here, right? As I said, when it displays, it's very rare that you'll see it displace this much, this aggressively, to be honest, right? But confidence in this trade, we've got all this trend line liquidity here. So all this is liquidity to be taken out, giving me even further confirmation to go long, higher. Obviously, we've got this higher targets. So if I was going to do this, I would probably go, what's that, a 1-to-1? Yeah, can work with that. And then I would close 50% that high, and then just look to target the high of the 4 hour. So let's see. Limit by just 1% risk, please. You could also just like optimum, right? Wait for a retest of this, but normally you would wait for a retest, but when the displacement move is this strong, the odds of you getting a retest like that aren't that great. So let's go ahead and press buy. And then I also just want to drag the final TP up to this 4 hour high and drag that there, but we're going to close. So that's a 1-to-4 and we're going to close half there. So we start to move up, first TP hit, close 50%, stop loss, drag it up below there or somewhere. And we just leave the runner and then that gets hit. So that's our draw and liquidity hit for today. So I probably wouldn't look for another trade, to be honest, on this day. Yeah, I'd end up chasing otherwise. I'd want to see a pullback all the way down to here and then continue up. But the entry model, that's again not the best example. Let's go to the next day and see if we can get a better entry model. Just going to check some of your questions quick. Can you pause once using toolpath in form of diagram? I would say 100 trades is good to backtest. How do you decide to take an SMT, the one that takes out liquidity? Either one matters. I heard that said that ICT was. So what are your thoughts on that? Well, it does. If you guys believe ICT works or doesn't work, that's what we're here to figure out today. All right. So we're backtesting it together, and by the end of, I'm following this checklist, right? The trades that I'm taking are following this checklist, along with a few tips from myself, of course. But by the end of the day, you'll know whether it works or not. So, right. So what do we have here? We do have SMT on the 15-minute at this. This is midnight, so we don't care about this. Go to New York session. All right. So what have we got here? So go on the 4 hour, 1 hour, decide where we want for the day. So probably looking at buys still here, to be honest. let's wait and see what market open has to say. So 1, 2, all right. So the next 1 minute candle will be market open. And let's see. Okay, so what are we looking at? The hardest thing to do with this is obviously master sort of draw on liquidity, right? The IFVG and the SMT, that's just your entry model, but draw on liquidity is what you really need to master. So we've got data highs here. So the 130 here, so this would have been CPI, PPI, something like that, and data lows. Now, data highs, data lows, two very strong points of liquidity. So we have taken data highs here, so we could look to trade back down to these data lows, or obviously we go all the way up and we start to look at these equal highs here on the 15-minute, and this fair value gap is our target. So let's have a look at this. So let's see how we play out here. I just want to pull up ES as well. Most of your entries will be on the 1 minute, 2 minute, 3 minute, 5 minute. So there's no fair value gap in this leg. So even if we did want to look for longs, right, and say we were to take out this and look for longs, there's no inverse fair value gap here. There's no fair value gap created, so there's no trade, even if we wanted there to be. So still no trades, no fair value gaps created, so no trades. Still no trades. So we might just continue to run up. Okay, so we do just run up to the draw on liquidity. So we do tap this order block up here, and we do reject quite nicely, but again, no entry. There's no fair value gap to be inverse. There's this one here, right? But by the time it's been inverse, we're long gone and we've missed our entry there. So that's unfortunate, but it is what it is. And we would have targeted these data lows. Now let's see what we've got. So now we've taken out the data lows. Let's just mark out these data lows here as well. So these have already got taken out first. So there was actually SMT before that move up. Let's just check here on the 15-minute. So there is actually SMT on the 15-minute being formed here. All right, if you just look, this low here, all right, that's just been taken out on ES, is this low down here. So that's SMT right there, okay? Here's our SMT. So let's see if this holds and we can possibly get a longer position here. We would need something a bit better to form here. This fair value gap here is too big, really. We don't really have much to play with. We'll see. We'll see. I think that's another SMT here in the 1 minute. This low to this low. This low to this low. So this would be our inversion here. So we could possibly look for a long off this. But again, it's quite big. It's not completely optimal. So we do have this leg here now. Could look to potentially take from. This chart's a bit messy. I'm just going to clear it. Let's check the 2 minute. So we've got this 2 minute fair value up here. So this would be my condition to go long. So we need to see price break above that to go long. So let's see, do we? Okay, we do. The size of the fair value gap doesn't necessarily matter, but it's more sort of a risk reward type situation. So, you know, if it's a massive fair value gap, you know, I'm not going to get a very good risk to reward on that trade. Right. So the first target would be here. Okay. Second targets, where are we looking on the higher time frame? Potentially looking here at these highs. If you were to really drag it out, I'd probably just on this trade go for this high though. So let's see if we can get pulled back into it. I'm not sold, to be honest, that we will, but we'll try it anyway. So is our limit placed? Yes. Okay, so we do get a pullback back in. And we start to push away, right? We take out this internal high. So that's been taken. So now we just go break even. Right? Regardless of anything, we're just protecting capital. Do we going to take it? At this point, when it starts chopping around, it's not obviously in the play, but I would probably take a partial. Come on. Okay, so we get there. That's TP hit on that one. So there we go. That's another good trade. All right. Just to run you through this one again. Right. Here was our SMT initially. Here and here. See here and here. Okay. And even then, again, a bit more here, right? Because if I look at this low, so this candle's low is there. This candle's low on ES, right, is here. ES never took this low. NQ did take this low. So there's your SMT, right? You could have even got an entry from this inversion, okay? SMT, enter after the candle closed above, right? Stop loss just below, and then targeted that high. We took the safer option, waiting for slightly more confirmation of this larger 2-minute gap here. Okay, the higher time frame that there is a fair value gap as well, probably the better time frame to take it, just because it's slightly safer. So these are a bit more aggressive, and there's a lot more to reject from, because price could have taken this high and then rejected from there. So it was better to wait for this one to get closed above. So we retest, we wait for the retest of this fair value gap just because it didn't display so aggressively. In the last two trades, it was so absurdly aggressive a move that it's unlikely that you're going to get a retrace, right? Just something that I've personally noticed was backtest in this model and is something that's well known was backtest in this model. If it's not so aggressive and you don't get all that so much displacement, it's better to wait for the retest more often than not. Okay. Yes, the PDF is in the Discord, but yeah. How can I get the PDF checklist you have? So the video will be available after. The PDF checklist, again, is in the Discord. But again, I will make a list of people and try to send it to you after. But if you're not in the Discord, you should be joining anyway. It's free. All right, so let's go to the next day and let's see what we've got cooking up here. So again, where's our draw on liquidity? First thing to decide, right? Where do we want price to go for the day? So yes, there will be a playbook for this available. I will send it after. Okay, so we have this fair value gap on the 4-hour, right? ES tapped into that, all right? Same fair value gap on NQ did not get tapped into, all right? And we never took out this low. So this low here, right? This low, ES on the 4-hour took out. This low on NQ never got taken out. All right, so there's our SMT. All right, so that's a 4-hour SMT. Pretty good confirmation that my bias today will be bullish. I'm just going to set up an SMT tag so I can label this for you a bit easier, guys. Bottom template, save as SMT. Okay, so there we go. Now we've got that. There's our SMT here. So our bias today would be bullish. On the higher time frame, we'd be looking to target this. On the lower time frame, just in case, probably this, just because we've got this order block here. Right, so let's go drop onto the 5-minute, wait for market open and see what we get. Because we'd also like to see a lower time frame SMT, remember. So we've got 15 minutes, so 1, 2, 3. All right, so that's market open on the next 1-minute candle. And let's see what we have to play with. So let's see. Okay, so we instantly sell off. Our bias is still bullish. So we need to see at least these lows get taken out here, really, to look for some sort of long position. Okay, so that low gets taken out. The same low on ES doesn't get taken out, right? This low here gets taken out. ES, same low, exact same low. If you look at the timestamp, 144 over here, 144, doesn't get taken out. So there's our SMT. Now we just need an inverse fair value gap. So that confirms. Here's our inverse right here. And then just to mark it on here as well is there. So that's what we want to see close through. And then we can look to target higher. So we reject initially. Can we get close through? I mean, it has technically closed through it. So we will take this. All right. And we're going to put our stop loss down here. We'll go break it. The risk to reward really isn't that great here. Where do we need to target to get a good risk to reward? Probably these highs up here, right? We've got this nice little bit of trend line liquidity here, though. So we can go with that as our target. Making this further SMT as well. See how ES is selling off, but NQ is going up? I mean, we'll punt it. We'll take it. It matches the model, so. Stop loss should probably be slightly lower, just under this wick to be safe. Okay, absolutely push up there. Here on break even. After I move this aggressive, I'm probably just going to take a partial here as well. Close off 50%. And we're break even. And then we'll just leave the runner. Which should... Okay, so we get taken out break even there. That's why it's always good to take a partial. And then it does eventually hit RTP. Slightly annoying, but again, good trade. Final targets would have been this high that we marked out, if you guys remember. Or final targets all the way up there. See how high we run. Okay, we don't end up chopping around and coming back. So yeah, but still, good trade there. Let's go to the next day. Most of these trades, if you'll notice, they're all around market open, right? So that's that's where the volatility is. That's where you're going to get it. Does not matter that ES did not inverse. So I'm just focusing on NQ. Okay, it's up to you which one you want to focus on, but I think this works better on NQ. Okay, just from testing it out, I'd personally believe that you should use ES as a confluence and trade NQ with this model. Okay. Yeah, you do need. So the key thing behind this, right, is your IFVG, your SMT. That's the entry model, right? The main thing that you need to learn is your drawing liquidity, because obviously your SMT, your IFVG, that's where price wants to draw to. That's where price wants to go. But the drawing liquidity is where price wants to go. The IFVG, the SMT, that's just your entry model. So you need to sort of get good at knowing where price wants to go on the higher time frame, and then using this to execute on the lower time frame. This is good because it's quite mechanical, and it gives you a sort of very systematic approach to follow that says, if I don't get an inverse fair value gap and I don't get an SMT, I don't get into this trade. But there is quite a bit of discretion that goes into this model. So here I can see straight away, looking on this, data highs, data lows from news. Okay, so on this day we've had news. All right, 1:30, 8:30 EST time. I got news high, news low. Okay, so again, taking those into consideration. We did say yesterday our overall draw on liquidity would have been this high, so we'll continue to go with that. But I only want to focus on this news high and this news low today. So let's go ahead and see what happens. So first things first, wait for market to open. Okay, so market's just opened. So I either want to see this news high or low go. All right, so the high is gone. So now we could possibly look to sell down to the news low or the data low. So this has also taken this. We're probably going to go for this draw on liquidity at the top. Okay, so we take out our goal for yesterday. So now we swept this 1 hour high, right? So now we can look to see if price can sell off from here. Only if we get the entry model, though. Only if we get our inverse fair value gap. It does look like we might be forming some sort of SMT here, though, which is good. Right, an SMT that's valid is always going to form at a key level. So a key liquidity sweep, a key fair value gap, something like that. So do we have an SMT there? That high to that high. Interesting. So this is an SMT. Here's our SMT, right? This high here, the 233 here, is this high over here. So this is an SMT. So now we need an inverse. Where's our inverse? There is this one here, but it's not very clear. It's not very good. I wouldn't take it. So we'd need to see this one go here. But this is an A plus, right? If you look in the PDF, I've added this in here for you guys. Where's formation? Preferably a single fair value gap, multiple fair value gaps in the leg reduce accuracy. So here we've got 1, 2, 3 fair value gaps in this leg. Okay. So this means that this is an A plus, right? And the reason this is an A plus is because yes, okay, we inverse this fair value gap, then we just trade into this fair value gap. So we inverse this, great, right? We get short, but then we just trade into this one, and then we come back and take out that. Or we trade down into this one, then we come back and take out that. So it's better to just see one fair value gap and take off that. So maybe we have a higher time frame fair value gap here we can work with instead. So we've got our higher time frame, one singular leg here, which is our 3 minute. And same goes on the 2 minute. So this would be my condition to get short here. So let's see. Another SMT formed here. All right, 2 minute. ES making higher highs. NQ making low lows. Okay. So do we get through that? So our target here would be data lows. So let's wait and see if a candle can close below through this. Okay, so it just absolutely rips and it's hit our target straight away. So there, we don't get an entry. And that's unfortunate. That's just how it is sometimes. We didn't get an entry there. So that trade, it went without us. It is what it is. It depends. So most of the time, you should wait for a retest of the fair value gap. Sometimes if there's strong displacement like this, right? So let's say this candle were to close down here and this wick wasn't here. Ignore this wick. If we just close down here that far away, that displacement is so strong that we wouldn't actually want to see. 1 second. Like if we were to see this pull back to here and just to go like that, that wouldn't necessarily be good. We'd rather just see it flush and go down to here. So like in the first two examples, when the displacement's that strong, you don't need to wait for a pullback. You can just get in and sell because the momentum and the pressure from that trade is so strong that it's unlikely to come back to your fair value gap. Okay. But yeah, we missed out on our trade here. We had the right idea. We just didn't get an entry. It is what it is. Happens. So let's go to the next day. So Monday, new week. Let's see what we're looking at here. So we've got these equal highs here on the 4 hour. Could potentially be an SMT there, to be honest, but we have taken out this low here on the 4 hour. All right. So looking good on that. Let's just check yes and see if there's any differences. Same sort of stuff, taking out this low. This is potentially an SMT. All right, as that high got taken, that one didn't, which is probably what caused this massive drop. So we didn't clock this yesterday when we're obviously that huge sell-off that formed was because of this SMT. NQ took out this high, ES didn't take out the same high, and then we got that crazy sell-off, right? Didn't clock that, didn't check the higher time frame. That's my bad. So yeah, let's wait and see what market open can give us. We do have all this liquidity down here that I don't like the look of. But I do still have a bullish bias. I'd like, I mean, perfect world would come down, take out this and then go up, but let's see. So let's just wait and see what market open gives us. Like that's always crucial to remember is just look what market open is going to give you. Just because market open can do a lot. It can get price to where you want to look for pretty quick. So let's see. Okay, so there's our market open. Let's see. Let's go. So on the 1 minute here. So already a market open, right? This is something that you'll see quite a lot as well with this model is that at market open, there'll normally be an SMT and then it will rally quite aggressively. So this happened yesterday. I think it happened today as well. So hold on, wait, no, this isn't an SMT. My bad, I'm tripping. My bad. Yeah, no SMT there. This is an SMT though. But we need a fair value gap to open up to get long. So we don't get a fair value gap open up there. SMT's holding, no fair value gap open up. So our targets would be this high, but we haven't got a fair value gap there. Anything on the 2 minute, 3 minute, 5 minute? No. Sometimes though, when there's not a fair value gap. Okay, so yeah, so there's one on the 30-second here. So we're not going to take this just because it's not in the playbook, it's not in the PDF, but you could have taken this on the 30-second. So there was your SMT, there was your close above, there was your long, there was your target. All right. So this does also work on the 30-second time frame. You even get a retrace into it, and then we push away. So yeah, but on this day, just because we're not trading the 30 seconds, we didn't get an entry. But yeah. So next sort of prices that we're looking at would probably be it. So we'd be targeting this high on the 15-minute. And then we've got this huge fair value gap here that we could reject off. All right, so let's take a look and see if we get an entry on that instead. Whereas if you look, right, look at this. This is crazy SMT. So NQ was pushing up that whole time. ES was pushing down that whole time. So weird stuff going on in the market there. Let's take a look though. So we tap into this. Now we look for the model, right? So need an SMT on the lower time frame, which obviously we've got because they're literally doing opposites. This would be our condition. Is there anything? Okay, so we've got a 2 minute here, slightly cleaner, right? Remember, as I said, one singular fair value gap in the leg is what you want to look for. You don't want these multiple fair value gaps in the leg. There's even a 3 minute there, but it's not formed yet. Okay, so can we close below this 2 minute? That would be our condition. This would be the target here. Okay, so we do. We miss our entry though. So this would be our entry here on the retest. And then our target would be down here. So limit, sell. Okay, so we get tagged in there. Oh, we get missed. I didn't put a limit, but at this point you'd be break even. So once you see this bullish momentum, you probably go break even. And then it pushes down. So on that one, we get taken back out break even, or in our case, a small loss, because we reject off this order block here. So unfortunate is what it is. But again, it was a valid setup. We had our SMT, we had our inverse on the 2 minute of the fair value gap, just didn't reach our target. So you would have either taken a break even or a loss there. Yeah, so probably taking a break even or a loss there. So on this day, to be honest, I'd probably be done because I've taken a trade and I've also taken a loss. So I'm probably out for that day. Not looking at the news, I am, but so the news, the only news that we care about is super high impact news, which is at 8:30. So in this scenario, it would be 1:30, so 2:15. So on the day where it is, I can see it. Like I can just see it by the candle, whether it prints aggressive news or not. How do you know when to put your stop loss? You have such huge displacement, moving profits moving very quickly. I'll show you that on the next example. Link to join the Discord, sure. Link to join the Discord. 1 second. Back to server, copy. There's the link to the Discord. To confirm, you wait for the fair value gap to form after the SMT, and that's the fair value. So the fair value gap doesn't have to form after, no. Go to the webinar chat in Discord. How do we determine the fair value gaps? So just to point them out, so just so they look like super simple to you, right? For those of you that are still struggling with a fair value gap. So if I come to the PDF here, okay, so this is a fair value gap, right? It's this void in between price. So here's the examples, but just to point them out, right? So can you see here that there's no, these wicks don't touch here, right? So this would be a fair value gap, okay? Because there's a void here. There's a gap, right? This is a fair value gap, okay? This is a fair value gap. 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 Okay. And going on and on. This is a fair value gap, right? You see like this void here. If if these wicks were to come all the way up here, there wouldn't be a fair value gap, okay? But since there's this void here, there's a fair value gap. Hope that makes sense. Yes, you still trade on high impact news days, but you just don't trade during the news. You keep saying the market opens at 2 p.m. Is it different in the Forex market where the market opens? I haven't actually back tested this in the Forex market, so I wouldn't know, to be honest. I know I've heard from people that this is still applicable in the Forex market. But yeah, I wouldn't be able to give you best time to trade in the Forex market. That's why trading ES and NQ is just a bit easier, just because you always get market open at 2:30 or 9:30 EST. So it's just very easy to go off that. It'll be in TradeZella University. Okay, so next day. So let's wait for market open. Well, first things first, we're going to look for our draw on liquidity for the day. So which is where? So we have taken out this low. No, we haven't taken out that low. Did we take? But we did take out that low on ES. So once again, what have we got there? We've got an SMT, all right, on the 4 hour. So potentially looking for longs on this day. So just because of that SMT, just to make it a bit clearer for you, if I go into the 1 hour, all right, this low here hasn't been taken on NQ. But if I go onto the 1 hour on ES, that same low has been taken. Okay. So that's our SMT once again. And I'll just mark this out. SMT, SMT. Okay. So concerns, we've got this 1 hour fair value gap. So that's a concern, right? Because price could tap into this and then reject. So ideally, I'd want to see price close through that. So let's see what market open does. Let's drop into the 5-minute, both charts, and let's just wait for market open. So there's 2:30. So 2:30 opens, price is going above. We do have this here. So you could have taken this on ES long there. And we do have this here. So let's see. I'm not sure we're going to get an entry. Oh, there was also an SMT here as well. If you look at this. So here we had just before the move on market open, we've got this little SMT here. So here and here. All right. Do you see the pattern and the consistency in SMTs before the market makes a move? Okay. So we had that SMT there. You could have got long here. Okay. And then you could have entered here like this, stop loss below the low, right? Stop loss placement, for the person that asked about stop loss placement, depends a lot on your risk reward. Perfect scenario, you can get the stop loss below the low, okay? But if you can't get the stop loss below the low, then you want to put it below, but like say that, for example, there's an order block here. So there's an order block here, right? Price could easily tap into that order block and then go, which it did. And there's also a very teeny tiny fair value gap there. So in these scenarios, if there's an order block and a fair value gap, we want to put the stop loss below. If there's none of that, then we can stretch it up and we can try put it as tight as possible. But whatever, if you can just get a good risk to reward, then that's all that matters. You don't want to be targeting, you want to be targeting at least a 1-to-1. And if you can't get a 1-to-1, then put your top loss a little bit tighter and take the risk. But as I said, there's a bit of discretion that comes into this model. So when I say a bit, with stop loss placement, take profit placement, all that kind of stuff, and finding your bias, it's all discretionary, right? It's not mechanical. It's not rigid. It's not like the webinar we did last week, which is extremely mechanical. There is discretion that's going to come into this. It's only the entry model that has the mechanical system behind it, but that's good, obviously. Yeah, happy to take a 1-to-1 using this. I'll send the PDF in the Discord chat one more time. Yeah. TradeZella University is just on TradeZella. I'll show it you guys after. But yeah, just for those asking, I've just put the PDF in the Discord channel again. So if you guys want to check that out. But yeah, so that one, obviously we missed that because it was before market open. You've also got up here as well, just looking at this, I've just noticed we've got all this trend line liquidity up here. Okay. So all that liquidity up there to go. And then we've also got just this 1 hour fair value up here. So price will probably look to trade up on that. So on this day, we missed out on a monster trade potentially. But let's see. Especially with this displacement. You know when I said when on market open, when price drives really aggressively like this with big displacement, right? That's how you know the market is just going to rally, right? You saw it in the first example, and now we're seeing it again here. So monster trade missed out there. And then we eventually hit our target there. Okay, so now potentially we could look for a short, but it's, yeah, I don't know if we'll get one. We'll see. So no SMT formed. We've got this fair value gap in this leg here, but no SMT as of yet. So we do close through it, but still no SMT. We have a bullish SMT. All right. So here and here, ES took the low, NQ didn't take the low. So I'd probably have long bias here, which does come through. Was there an entry that you could have taken there? Not really. It's not clean. After this big move from this day, to be honest, I probably would just give up on the day. So let's go to the next day. Okay. Wow. So 8:30 news happens. So this is a high impact red news day. 8:30 news happens. His data highs, data lows. Yeah, probably looking to continue to go down here. I wouldn't want to take a trade on this unless it was at least in discount. So let's mark out 50% here. And let's see if it can pull back a bit because, yeah, I'm not about to sell this much in premium. So let's see. Let's go off a time frame. Okay, so there's our 50% tap. So we could possibly look for a trade around here. Oh, so SMT again, potentially. All right, there's our SMT. Where's our condition to get short for an entry? It would have to be here. But again, this isn't very clean. This isn't A+. Look how many fair value gaps are in this. Another one. Another one. All right. Is there anything better? Okay, there's yeah, like this isn't a clean setup by any means. And the SMT doesn't hold anyway. So no trade there. Keeps pulling back. This isn't too bad. Is that an SMT? Can't quite tell. No. This wouldn't be too bad though. And you could just target at this low if it inverses. Does inverse. I mean, you could take this. This would be like not very well rated in my opinion. After this sort of wick here, I'd put my stop loss just above that because that was kind of a price coming back up to sort of grab liquidity, and now it's kind of going to go, but I would just target here, extended targets, obviously all the way at the lows, and just punt it, or maybe this fair value gap. Yeah, we'll take it on half risk. Okay, so there's your TP1, and I'd take 50% there. Still looking for this like massive move to get finished off to come and take out these lows down here. So I'd probably just target those lows. So you get taken out break even there, never comes. Again, a B sort of setup there, not super clean, but it's one of those days where big high impact news has happened and you kind of just fight in the market. Like we're trading into this big 1 hour fair value gap here. So for us to truly be bearish, we'd want to see this get inversed here. 15-minute fair value gap, sorry. To do the webinar recordings, the ICT recordings are on YouTube, which I'll link now. Sorry. So all the ICT recordings are on this YouTube channel. And any, do we not aim for news high in this situation? Yes, we could actually. Yeah. So yeah, good spot. So let's see if we can get an entry for news highs. So no SMT on the 5-minute. So there was actually an SMT down here, but just because, again, me being sort of blind in my bias, this is where bias comes into it a lot. I've missed this SMT down here. But yeah, you could, I mean, there's this inverse here. No SMT though. That inverse does end up playing out. So if you were to take that, you'd be probably around here and you target the news high. So for the person that called that out, nice work. At this point, I'm breaking even for sure. Not liking that. It comes back, ends up typing back into it and then pumping away. So yeah, that inverse fair value gap did hold in the end. Was there an SMT? No, you never actually got one. Yeah, so I wasn't a huge fan because there was no SMT. If there was an SMT, I would have definitely been a fan of that. But yeah, it does eventually get up there. Good start. Good spot. All in TradeZella University. Is this the only model you trade? I trade various sort of things. But again, this is a backtesting series, right? So I'm giving you guys models that you can sort of use as a base, and I'm giving you playbooks that you can go and you can backtest, you can optimize, you'll start to spot things that work for you and start to spot things that don't work so well. And then you'll find out different trade times, trade areas, right? It's up to you guys to go and backtest, optimize, refine, and then improve, and obviously learn how to use the models. But all the backtesting sessions we're going to do, they're all going to be strategies that I have backtested personally and work. Okay, so the Nexus Plus, if one that we did last week, for example, that has been backtested, that's been proven, it works. Okay, along with all the other ones that we've done in the past and all the other ones that we're going to do. Win rate so far is like ridiculously high because we've been going break even a lot. I'm not sure. I'll look at the stats after, but yeah, it's going to be pretty high. Probably around 80, 90%. Yes, the SMT is just showing relative strength, weakness to help inform confidence bias. That's yes. SMT though will make your trade a lot higher probability. If there's SMT, you can have much more confidence in the trade versus that when there isn't, it's going to be a lot less likely. SMT is sort of that, as I say, it's that signal to say that the market's about to reverse. Um, yes, in Discord, TradeZella University. The previous last week's webinar is in TradeZella University. You also have to bear in mind, right, that what we're doing here, so these big RR trades, like we're in a backtesting environment right now. Would you take these and would you hold on to these trades in a live environment? For example, our target up there was that data high, right? But this is a long time to be holding a trade for. We're probably just going to target this high and take it, right? So is our RR actually going to be that big in real life? Potentially. Depends on who you are and your personality as a trader. Okay, it's going to vary from person to person. Just if, say, 10 of you were to go and take this model and trade it today, I can guarantee not all 10 of you would trade it the same, and you would have different RR perspectives. You would take different type of trades based on your risk tolerance, that type of thing. Okay, so it's never one size fits all. Anyway, let's get a couple more trades in. I'll show you guys TradeZella University in a second. I'll do a couple more trades, and that sort of takes us up to an hour. And then we'll kind of call it. We'll just do this last day. So where are we looking? So again, on the high time frame, finding our bias. Where is our bias? So we look pretty bullish, to be honest, I'd say, to come up and take out these highs. Going on to the 1 hour, close pretty bullish. We didn't quite inverse this fair value gap though. I'd love to see this get inversed just to kind of like confirm that for us. So let's. So what are we looking at? This is a trickier day for sure. Let's wait for market open. I'd like to see this get pushed above. And we've also got these data highs, data lows from news. So we want to see one of these go and kind of look for a trade the other way. So we absolutely rip a market open to the upside to take out our draw on liquidity. Let's just check. Was there an SMT there that we potentially missed out on and we didn't clock? That low. So that high. Yeah, there was a little one here. So there was this SMT. It was only small though. Hard spot. And we also never got an inverse here. So there's no fair value gap to take a trade from here because there's no fair value gap in this leg. So there's nothing we can actually take a trade from. So this would have been a no trade anyway. You would have, using this model, you wouldn't have been able to catch this move. So is what it is. Not always available. A fair value gap doesn't always open up. So we reject before taking that. We come down, we take all this. Oh, I've accidentally skipped on the 15-minute here, haven't I? Here's an SMT here. Right. Inverse would be this. And you could possibly target data lows. There's an inverse. So this could form an SMT here. Does inverse long though. No SMT though. Yeah, we're going to go hit that liquidity target. Yeah, hard to get in here with these data loads as well. I'm not really trusting it. Yeah, let me just check. By the way, these sessions are awesome. Thank you for making them happen. No worries. I'm glad you're enjoying them. All the traders I know that use this model have very low RR. They go for high win rate and low RR. Yeah, it's because it's very easy, right? To obviously just take an inverse and target the nearest sort of local liquidity. So if we just come back to one of the previous examples or just an example in general, not saying that this necessarily fits, right? But let's say, for example, we inverse this fair value gap and there was an SMT here, right? And this was our inverse here. Okay, it's very easy to just put my stop loss there and target this low, right? And take my 1-to-1 and be done for the day, okay? Very, very easy to do. And that's great. And you know that works, right? But obviously if you have a strong conviction in your daily bias, right? And for example, you're extremely confident that this is going to go short on this day, like you can hold a partial here, right? I would always say take a partial at this first internal sort of liquidity, this first internal low here in this example. Okay. And then look to go break even and then hold a runner if you have a clear daily bias, as in you're confident on the 1 hour, 4 hour daily that it's going to go in your direction. Then it's worth leaving a runner, going for a higher RR, right? If you don't have clear daily bias and you're not like, I am certain that price is going to go down today, I'm so sure that's my bias for today, then just take the 1-to-1, take the first nearest liquidity that you can get, and that's your money for the day. Okay. Do you never add to your trades? Mm, no, not really. Not me personally. I know people that do. Um, does the SMT matter whether it's been Nasdaq being higher than yes? So yes and no, right? So say for example, NQ was the one that made the higher high. It's likely to be weaker, to be stronger. Sorry. So let's say this, right? So ES made the lower low, NQ made the higher high, right? This tells us that NQ is more bullish. So potentially it could be better to take the short on ES because ES is more bearish because it made the lower low, if that's the way that we're looking to trade. Okay. But personally for me, 90% of the time I'll always just trade NQ just because NQ has bigger movements, right? More volatile. It's going to get to my targets faster. I'm likely to get screwed around and chopped up as much. So that's just my personal preference. Do you trade London session? No. Only New York session on this. All right. Has anyone else got any more questions before we wrap up here today? 1 second. You're doing this after market close in London time. I appreciate that sort of first one. Awesome. I'm glad you guys. Does this work for crypto and fair value gaps? Yes, but I haven't back tested it. So again, up to you to go and back test and find that out. I've given you a base here. I've given you a playbook to work with. Up to you to back test, optimize, find out what works, find out what times work for you, find out what assets you want to trade it on. I know it works on NQ. I haven't tested other assets personally myself, so I'm not going to sit here and tell you that it 100% works extremely well because I don't know. I haven't tested it. Up to you to go and find out. Do you scale in the entry? I personally go all in at once. Do you consider the DAO? Not for NQ and ES. If you're unsure how to find daily bias, go to this YouTube channel and watch the daily bias video on there. How does this work on QQQ and SPY? Yeah, same. So QQQ and SPY are essentially the options versions of NQ and ES, right? So it's very, very similar, right? QQQ would be NQ and SPY would be ES. How soon after the fair value gaps forms does it need to inverse to be valid? As long as there's an SMT and then it inverses, it's valid. Okay. So it can be here, and this SMT is what makes it valid, but it needs to be at a key level. So it needs to have taken a key. So it needs to either, so you can trade this in two ways. You can trade it in terms of continuation, right? But the most optimal way to trade it is it takes liquidity. So it takes this liquidity, right? And then here, after it's took out this liquidity, here we look for our SMT and our inverse fair value gap. Okay. How do you pass prop firm? Do you have any future class related to it? How to pass a prop firm? Get a strategy, back test it, collect the data, and then once you've got that collected data, obviously, then you know that your strategy works. You're gonna have confidence in your model, and then you just trade as you would trade as you were back testing, and you'll pass a prop firm. Is SMT always necessary, or can I take a trade only if there is liquidity sweep on NQ? It's not always necessary, but SMT is going to significantly increase your win rate. Okay. All right. Cool. I'm glad. I hope you guys all enjoyed. Did everyone enjoy that today? Did everyone find that helpful? Is the main thing that I want to clarify. Okay. Perfect. Cool. And obviously, this, like, it's not rigged or anything, right? I've just hopped on here, selected the date, and we've just done it. So these are results of what you can get if you learn how to do it quite a lot. Like, I've back tested this a lot in preparation. So yeah. Yeah, we didn't take all the trades that we should have. Let's have a look. Like, we didn't get through as much data as we'd have liked to have. Where is it? Here it is. So we took 6 trades in total with an 83.3% win rate, 17% profit factor, and an average risk reward of 3.5 to 1, netting us 7% for, I think it was 2 weeks worth of trading.